dive right into the thriving world of dollar stores with Dollarama Inc., the undisputed leader in Canada. With a commanding presence of 1,541 stores, Dollarama's dominance in the industry is unparalleled. This giant of the dollar store world has carved out a unique niche for itself. It differentiates itself from the crowd by operating on a fixed price point strategy. From as low as 87 cents to as high as $5, the price range of items in Dollarama is a testament to the company's commitment to affordability and accessibility. But Dollarama's footprint is not confined within Canada's borders. The company has expanded its reach into Latin America thanks to the strategic acquisition of Dollarcity. This move has allowed Dollarama to extend its winning formula to a broader audience, further cementing its position as a key player in the dollar store industry. Dollarama's story is not just about its present achievements. It's a story of consistent growth and expansion. Despite the challenges posed by the pandemic, Dollarama has managed to maintain an impressive growth trajectory. The company has seen a year-over-year growth rate of 5.17% in comparable store sales since fiscal year 2014. This success has not come without its share of challenges. Traffic was flat before seeing a sharp decline in fiscal year 2021 due to the pandemic. But true to its resilient nature, Dollarama rebounded with an impressive year-over-year growth rate of 10.4% in the third quarter of fiscal year 2024. With a strategic growth plan in place, Dollarama targets to reach a whopping 2,000 stores by 2031. This ambitious target reflects the company's confidence in its business model and its commitment to serving customers with quality products at affordable prices. The future indeed looks bright for Dollarama as it continues to shape the dollar store industry. Unveil the resilience of Dollarama as it navigates through the choppy waters of the pandemic. In an era when many businesses have struggled to keep their doors open, Dollarama stands out as a beacon of consistency. Despite the trials and tribulations of the past few years, this retail giant has managed to increase comparable store sales every year since fiscal year 14. Yes, you heard that right, every single year. What's more, they've achieved an impressive year-on-year growth rate of 5.17%. But what about the pandemic, you ask? Well, it's true that the pandemic did pose some serious challenges. Store traffic, for instance, took a hit. It was flat at first, before declining sharply in fiscal year 21. However, Dollarama didn't let that keep them down for long. In a remarkable show of resilience, they managed to rebound, with year-on-year growth rates of 10.4% in the third quarter of fiscal year 24. And while the pandemic has changed many aspects of our lives, it has also altered our shopping behaviors. This is reflected in the average transaction size at Dollarama stores. With pandemic-related changes in shopping behavior, the average transaction size saw a significant increase, shooting up by 29.1% in fiscal year 21. These numbers are not just statistics on a spreadsheet. They are a testament to Dollarama's adaptability and commitment to serving its customers. They reflect the company's ability to adjust its sales in the face of challenging winds and continue to move forward. So, while the pandemic has certainly had its impacts, Dollarama has shown that it's not just about surviving, but thriving amidst adversity. In the face of adversity, Dollarama has shown remarkable resilience and adaptability. Peer into the future of Dollarama and what it holds for potential investors. The last couple of fiscal years have seen a shift in the company's pricing strategy. There has been a noticeable drop in pricing during fiscal years 22 and 23. This, interestingly, coincides with an increase in store traffic and a trend towards more frequent but smaller purchases. Now you might think that lower prices and smaller purchases spell trouble. However, this appears to be a strategic move by Dollarama. By offering products at lower prices, Dollarama attracts more customers to its stores. These customers may be making smaller purchases, but they are visiting the stores more frequently. This strategy seems to be working, as the company has witnessed a year-on-year growth rate of 10.4% in the third quarter of fiscal year 24. But that's not all. Dollarama has proven its resilience and its ability to adapt to changing market conditions. Its consistent growth, even during the global pandemic, is a testament to this. The company has not only managed to increase its average transaction size by a whopping 29.1% in fiscal year 21, but it has also consistently increased its store count in Canada, with an ambitious target of reaching 2,000 stores by 2031. In addition to its domestic expansion, Dollarama has also made inroads into the Latin American market with its acquisition of Dollarcity. This move has allowed Dollarama to extend its reach and diversify its revenue streams, further strengthening its position in the dollar store industry. Looking at these factors, the future of Dollarama appears bright. With its robust performance, strategic expansion plans, and a proven ability to adapt and thrive in challenging market conditions, Dollarama stands as a compelling investment opportunity, poised for significant growth in the coming years. Before we wrap up, here is something you wouldn't want to miss. Our channel offers an abundance of insightful analyses and updates on a variety of companies. By subscribing, you're giving yourself the upper hand in the ever-evolving world of business and finance. Stay on top of your investment game by subscribing to our channel. Don't miss out on the latest insights and trends in the world of business and finance.